Welcome to the Cashflow Ninja, the podcast sharing how to create and grow income streams and manage, multiply, and protect your wealth in the new economy. Are you tired of trading your time for money? Do you desire freedom today instead of retirement in 10, 20, or 30 years? I'm MC Laubscher, and this is the Cashflow Ninja. This is Cashflow Ninja. I'm MC Laubscher. Thank you so much for joining me in another episode of the Cashflow Ninja and spending your most valuable resource, your time, once again on the show with me. I've got another fantastic guest for you. He's been a previous guest on the show, Andrew Lanoie from Four Peaks Capital Partners. For the previous episodes that we recorded with Andrew, I would highly recommend you check out those episodes along with all the other great episodes at cashflowninja.com. Andrew, welcome back to the show.
Hey, MC, I've been looking forward to this conversation. So glad to be back.
Absolutely. We find ourselves in a very strange period of time at a very strange time this year, which has already been very, very interesting. And before we jump into that, for listeners and for viewers that this is their first time spending some time with you, can you please share a little bit about your background and journey?
Absolutely. So I'm sitting here today. I'm in Phoenix, Arizona, where I relocated about 3 years ago from Los Angeles, born and raised in New Hampshire, lived in Los Angeles for about 20 years. And I was a talent agent at a company called William Morris Agency, represented comedians and bands, did that for the better part of 20 years. When the subprime crash hit, I had all my money tied up in the market, like a lot of hardworking Americans. My parents got hit pretty hard in the downturn. They were retired, lost a big portion of their retirement savings in that downturn. And so this is 2008-ish time period. And that was kind of my big eye-opening. How on earth does this happen to a hardworking, working class family who raised 3 kids and lower middle income and, did all the things our financial advisor told them to do. And so I immediately started reading a bunch of books. I had read Rich Dad and, the whole gamut of books on economics. And then it all kind of led to real estate investing. And in 2009, I started to buy single family homes in Dallas, Texas, while I was living in Los Angeles and still working as a highly paid W-2 employee. And so that's kind of how it all started, of just buying single family homes. And it was really investing for income. And I think you could certainly relate to this once you kind of get the bug and you realize that you can create income and buy assets that create passive income. It's really, really powerful. So in a pretty short period of time, I had a plan to exit corporate America. I gave myself about 5 years, and I did it in about 4 years, just building up passive income. And also it was a great time to buy real estate. Real estate was very inexpensive after the crash in some markets, especially some residential real estate. So that's kind of the short path to how I ended up doing what I'm doing now.
Fantastic. Yeah, and I can definitely relate. Once you get that bug and you figure out how you can stop trading time for money and buy your time, you're like, whoa, how quickly can I do this? How fast can I get there? So it becomes it becomes an exciting journey, right?
Yep, absolutely. Absolutely.
Now, where we are today, so you have for folks that's not familiar with you and follow you, I'd highly recommend you go to Four Peaks Capital Partners and get on the mailing list there, because the blogs and the daily posts that you guys put out, Andrew does a phenomenal job of writing some really, really, really good articles of what he sees, what's going on. So I would definitely recommend that. Let's talk a little bit about the year where we are at right now, the economy, the jobs, what you're seeing right now, because you have some interesting perspectives too, looking at where we are today from where we started this year.
Yeah, and it's interesting. So we're in July now, 2020. So we're, I guess, over 100 days into coronavirus and COVID-19. Kind of backing up a little bit, we after the residential, getting into single family and residential, one of the big things that we found through that whole journey is that there was such a huge demand for affordable housing in general. I use these numbers all the time, but about 50% of wage earners in the country make less than $31,000 a year. So you're working at a Walmart making $28,000 a year, and maybe you're taking home $24,000. Doesn't leave you very much on a monthly basis for housing. So in my mind, affordable housing is severely, and it's a very underserved market in the United States. And that was really the direction that we wanted to go, was real estate, A, first and foremost, and B, was focus on affordable housing. And it's really supply and demand 101. It's until there isn't a need for affordable housing in America, which I don't think will really ever stop. Certainly not in my lifetime, then that's probably a good foundation to have a business model on. So we were chatting about this a little bit earlier. Through all of this, I mean, it's unbelievable what's happened, and I think we're getting close to 50 million jobless claims, which in less than a 4-month period, which is just mind blowing. That's such a massive number. And I think, we're seeing businesses going under, and the concert business and sports. And a lot of my friends are in those industries, and a lot of them are out of work now that were somewhat bulletproof industries, right, for a long, long time. So, I mean, amazing and just heartbreaking what's happening. And through a lot of this too, I mean, I wouldn't want to be someone who owned a bunch of office buildings during this. I mean, imagine owning an office building portfolio, and you were at 82% in February, and all of a sudden March rolls around and now you're at 5% or 0 in some case. And so a lot of real estate is getting hammered right now, including retail. What are you seeing on your end? We started to talk about this a little bit.
Yeah, it's the numbers are quite remarkable if you look at it. You mentioned the unemployment. I mean, if you deep dive into the data, because what's the joke about data? If you torture it enough, it confesses. So. Right. But if you really look at it, a major part of the population of the folks that can work, basically almost half of them are unemployed at the moment.
Right.
Of people that can actually work. So that's something that we seriously look at, because that obviously impacts everything. People that are unemployed and no longer earning any wages, they cannot pay rent, they cannot pay mortgages, they can't go out and buy goods and services. And for the period being, there was a lot of money thrown at this. We actually got direct payments from the government to the citizens. Every person got under a certain income, basically got a check. There's been help for businesses, bailouts, upon bailouts. And at some stage, one would think that this would stop. So that is going to play very, very heavily into the next 6 months. Where we, just looking at the real estate market, people paying rent, people paying mortgages, not being able to do so, buying goods and services. This brings in commercial real estate, strip malls, and so forth. So we're looking at this, very carefully to try and see it for what it is, rather than what we would hope it to be. And it looks like there's going to be a lot of challenges in many different places. One thing that I've also picked up is, I believe it was Help that ran and looked at the amount of businesses that have not opened. I believe that was around 41% or over 40%, if my memory serves me correct. I'm a former rugby player, so getting a couple of knocks against the head, sometimes you forget things. But I believe it's over 40%, and the same thing with restaurants. And where we live, and in most parts of the country, restaurants haven't opened up to maximum capacity. If I'm stating that correctly, folks can sit outside, and for people that own restaurants and operate them, and know people that operate restaurants, they know that you have to turn basically all the tables once in the restaurant just to get close to break-even point. So
Yeah.
now,
Starting with razor thin margins, right? Now at 50% seating or whatever. That's the
right.
number I keep hearing.
Yes,
Yeah,
exactly.
incredible.
So you've got to turn it on razor thin margins, and now all of a sudden you only have a certain amount of hours that the kitchen, for example, is open. So that's kind of being reduced, and then the capacity of the restaurants being reduced. So the opportunity to get to break even and just stay profitable is diminished. So there's going to be a lot of challenges, and we're trying to get clarity and see it for what it is, because once we do that, there's also going to be massive opportunities.
Right, right. And certainly we're not in a real estate correction right now, right? I mean, we talked about this a little bit earlier. I mean, you could even argue we're not really in a pandemic with the actual death rates right now. I mean, that may be open for debate, but we're certainly not in a real estate crash. I don't know if we're technically in a recession right now. So it's this weird gray zone that they're putting pandemic on.
Camaplan is one of the leaders for personalized tax-deferred and tax-free IRA planning. Camaplan's team can assist you to take control of your retirement funds and financial future through self-directed investing. They offer support to clients throughout the entire process, from opening your first account to making your first purchase to self-managing your assets. Camaplan works with a growing network of investment providers in all asset categories and offer free investor education through classes, events, and webinars with over 15 years of leadership and self-directed retirement investing. Camaplan will help you unlock a convenient and safe way to manage your retirement investments and discover financial freedom beyond traditional investments, beyond Wall Street, and go from forever taxed to never taxed. Start to take control over your retirement funds and financial future today by visiting cashflowninja.com/Camaplan.
The other thing that's interesting is I have a friend who owns some of Best Buys, and they said they had some record-breaking months during this. And I think the same thing with certain other industries like the Home Depots and people doing personal projects around the house. But a bunch of Americans got a $1,200 stimulus check, and they went out and they bought computers and TVs, and which of course that's going to happen. So you have these industries that have done okay through this. And on the flip side, the courts have been closed for the most part for certain things. And of course, some of that state by state and market by market. But I mean, my goodness, you've got courts that probably were not operating and processing things efficiently to begin with. And now it's 90 days, 100 days of backlog. And, we saw a headline that came out that Men's Warehouse just defaulted on their first 30 days on the bond, whatever that was, $6 or $7 billion. So there's all of these companies, big to small, whether you're an office building owner or you're a retail owner or you're a Men's Warehouse. And it hasn't even cycled through the courts yet because everything's so backed up. So, how long does all this take to cycle through? Is it, are we going to start to see this in 12 months from now? I mean, what does it look like? And that's kind of the aftermath to all this, which things that we're certainly talking about, just being an affordable housing. I mean, thankfully our business has only been down about 1 to 1.5% in collections the last 90 days, or April, May, June. So back to, retail's getting hammered. If you're a lot of commercials getting hammered, just imagine owning a small nail salon or being the landlord in that. And you've got a bunch of those kinds of businesses. I mean, you're just getting hammered. So it's really interesting to see.
Yeah, I think also the big thing that folks were not talking about was the cost, the additional cost that businesses would have opening back up. You mentioned hair and nail salons. There's, for example, someone in our network, they had to get certifications done for everyone in that works in their salon, and there's several locations. It adds up to a significant amount for a company that hasn't had income really for 3 months basically. So, and other industries are the same thing where there's going to be additional costs. So not only are they opening back up, but there's now increased overhead to try and get through this. So it's going to be interesting to see what happens. You mentioned retail's, certain retail's been hit very, very hard. Live events, sports, there's folks in the network that I'm a part of that heavily operates in that. Their business is basically non-existent. And then there is, of course, with all of that, there's certain companies that have done really, really well. And a lot of companies that actually grew a lot, believe it or not, that realized that they could actually scale utilizing Zoom technology and reaching more folks, especially in the info space.
Yep. Yeah, really interesting.
Yeah. What are you seeing for the right now and maybe in the rest of the year? Let's talk about some certain parts of the real estate market. So what are you seeing, for example, just in single family where you started cutting your teeth as an investor? Every market is different, but there was already a big migration pattern, for example, one that we've discussed it many times on the show. Folks leaving certain states going to another. We're seeing that accelerating very quickly. Yeah. Not to pick on New York, but it's all over the news. People are fleeing the city, going into different places. What other things are you seeing in trends in just residential real estate?
Well, it's interesting. So where I am in Phoenix right now, it feels like houses are sitting on the market for less time. Really interesting. It feels like it's probably towards the top of the market. I would say a year or two ago, I would have said there's an argument to be made that people are going to start clustering more around major markets. So you've got some of these kind of podunk one-horse towns, and the meatpacking plant closes that employed 3,000 people. And you just think about Dallas, Texas, the last 10 years. Dallas, Texas has always been slow and steady, but Dallas really blew up the last 10 years. And a lot of that is driven on by jobs that market was creating, and those industries in that market. So you're sitting in Detroit, Michigan, and you can't find work. Let's just say it was 8 years ago. Yep. And Dallas, Texas, California companies are moving out and it's expanding and there's lots of land and growth and everything. And all of a sudden, Dallas, Texas is just a huge employment market. So you're going to move to where the jobs are. Well, cut to now, and it's like using New York as an example and some other markets. I mean, do you want to go live in a massive, really dense city that you're on top of people? And it's all, New York's a great example. I think people are starting to kind of leave those cities. And also, I don't know if you want to be in big, major apartment complexes right now. Certainly some people are out not wearing masks and kind of saying, hey, this isn't going to affect me because I'm young and I'm healthy and whatever. But I think that is an interesting trend to be watching. And really what happens, are people going to start to exit these big cities? San Francisco and some of these areas are just really expensive. So one piece of data that I haven't really seen is of these almost 50 million jobless claims, like what industries did they impact? I would argue it's a lot of industries across the board, but funny enough, in our world in affordable housing, since our collections haven't really been down so far, and we don't have a crystal ball, we don't know exactly what's going to happen, but a lot of our residents and our tenant base are essential workers. And so those are folks that are working at the Targets and the gas stations and the Walmarts and the Costcos and the grocery stores and whoever's left at restaurants. So it's interesting, but I would definitely say that's certainly a trend to keep an eye on what's going to happen in these major markets over the next few years.
And the rocket fuel of remote working, where companies are now, they actually seen the benefits, where, like Twitter, for example, is the big name that they told employees that they don't have to come back into the office. So definitely, now all of a sudden you would have to live in big major markets to be close to employment. Well, now you can live anywhere and keep the job. You don't necessarily have to, if you're moving away, now have to look for other sources of employment, right?
Yep.
And the competition from the job market. Think of, that's another thing in the economy, because if you think about it, if you had a company in New York or or in Phoenix where you live, and they hired local people, well, now you're posting, let's just say, the jobs that you offer, and it's nationally, because you can now live in New York State or Vermont or New Hampshire and work for a company that's based out of Philadelphia, for example.
Right.
So
Right.
brings a different element to it, right?
Yeah, and it's interesting. We touched on this a little bit before we started, but no one, of course, has a crystal ball to see what's going to happen in the next 6 to 12 months, or even in a few years. But I don't think we've really seen the worst of this yet, just in terms of what it's going to do to the economy.
Investors, don't sleep on this market and trends. Did you know that in many cities across the U.S., renters now outnumber owners? And demand will only increase. More and more will be renting in droves, and it's putting the squeeze on a tight rental market. Four Peaks Capital Partners has been successfully investing in this proven, recession-resistant sector for years, providing investors with passive income and capital appreciation. Protect your portfolio and invest in private real estate funds, because the demand for affordable housing will only increase. Invest with Four Peaks and let us do all the work. Find out more by calling 8775-INCOME. That's 8775-INCOME. Or visit privateincomeinvesting.com. That's privateincomeinvesting.com.
And the other thing, imagine Chase announced this. This was a while back during all this. Chase announced that their restrictions for home ownership was changing, and so now you needed at least a 700 FICO, and I think it was at least 20% down. So that's harder to become a homeowner now in the United States. I don't know if the other big banks followed suit or not, but that was really interesting. And we all know when there's these massive events like this, whether it's a recession or a real estate crash, obviously lending is one of the first things that kind of tightens up, and there's all kinds of restrictions. But again, we're in this big gray area, and we don't really know. But for Chase to kind of set a precedent with that, imagine being in the middle of a home loan, and all of a sudden you were putting 15% down, and that's because that's all you could afford to put down, and you had all of a sudden this got pulled out from you. So that's really going to push more pressure down on the rental market. We've all heard that America's becoming a renter nation, right? That term that gets thrown around a lot, but things like that, which happened with Chase recently, really starts to put some downward pressure on that.
Yeah, and it brings me one of the things that that I wanted to talk to you about, because it was said tongue in cheek that the American dream was sort of to own a home. Oh, that's what I was marketed, right? White picket fence, home ownership and so forth. And then after 2008, 2009, Wall Street bought the American dream. If you look at the amount of hedge funds that started buying up massive amounts of homes. And I know you've been speaking a little bit about this too. Is the American dream dead? What's going on?
Yeah, I think the American dream is dead, and I think it's been dead for many years. And I tell this story sometimes. My dad's father, who raised 3 kids, they were lower middle class, one job, put all the kids through school, owned a house, owned a car, all on one salary. I mean, that's out the window now. I mean, we have residents in our communities that literally have 4 jobs between mom and dad, if they're even still married, and they're barely getting by. And really, it's because salaries have not kept up with inflation. And so that's been the trend. It's been happening for decades. And so you could rely on one stream of income, one salary, and you could live a pretty nice life. I mean, you weren't rich, but you could certainly live a really nice life. I think for the most part, that's out the window. And case in point, where we're living right now, I mean, imagine only having one stream of income and an entire industry goes away. Never mind you lose jobs. I mean, again, I haven't seen the statistics. I mean, we're almost at 50 million jobless claims in a 4-month window, which is staggering. I mean, usually I don't know what the numbers were. I think it was a couple 100,000 a month or something like that prior to all this. So, And you're talking about industries that may never come back. You're talking about a massive percentage of small businesses that may never come back. So we don't really know. We don't really know what the outcome of this is going to be. But going back to, only one stream of income. I mean, most Americans don't really have much for savings to begin with. So it's not like they could fall back on anything. And certainly getting a stimulus check and unemployment, I mean, that's a Band-Aid. That's a short-term solution. So I think it's going to be really interesting to see what unfolds the next 6 months, 12 months in the economy in general.
Yeah, to your point too, with the massive government assistance that people received, businesses received, corporations. I mean, it was the trough was overflowing with money into a lot of areas. What it essentially did was it froze to what was going to happen eventually. It kind of paused it or slightly delayed it, because even if you were just mentioning there's some industries that are going to go away, but those industries now were still kept afloat basically with government money to pay employees and so forth. So a lot of folks are saying, oh, it's just going to come back. Well, once the economy starts going, some of the industries that are just going to disappear are now going to realize that they can't pay employees because they're not profitable and they're running out of the money. So that's kind of like the tail end of the economy. I would say the lag, which I think is going to hit in the next 6 months.
Yep, absolutely agree. I don't think we've seen, this is really just the beginning. And even if there's a vaccine in the next 2 years or whatever, we resume as much as I dislike the term, we resume whatever the new normal is and less travel. And you're probably not going to hop on a flight to go to a meeting in New York when you can do it on Zoom right now. But whatever the new normal is, I don't think we've even have a clue how this is all going to unfold. Especially when courts are back up and we see exactly what the percentages of mortgages that are going to fail. And that's everything, right? That's commercial mortgages. That's not just single family and people who can't pay their home right now that, had a forbearance for 2 months or 3 months. I mean, we're getting close to 4 months into this now.
Yeah, I believe it was, if you look at the commercial stuff, you mentioned Men's Warehouse. It was Mall of America that was also missing some payments already. So,
yep.
And that,
I think Cheesecake Factory was another one, right? That was another
yep.
one that was having some issues.
Yep. I just put it in the first question is the Mall of America closing? I just put it into my web browser. So folks are already seeing it. So from that standpoint, and obviously that's jobs, that's, investors, investment, capital, and so forth. So opportunities. So the one thing that I did see, especially in our network, there's folks that, I like the clarity game, right? Clarity instead of just positivity, because if you can see the train coming and you're on the train track, it doesn't matter how positive you are, that the train's going straight over you. So the first thing is to just get off the train track and then kind of do that. And I've seen a lot of folks in our network during this past 6 months, the 100 days of COVID. I mean, from someone that has lost it's almost 40 pounds at this stage. It's quite remarkable, to people starting businesses, to people collaborating with other folks and starting new businesses, whether it be coaching, whether it be online businesses. There's been a lot of stuff there. One of the things that I'm looking at too, from an opportunity standpoint, what I don't think a lot of folks realize too, is disrupting, because industries will be disrupted, but being part of that and seeing that the trend is going this way. So I'm thinking about, if you're a coach or a consultant or an advisor, that the virtual game is the new game in town. It's here. The genie's not going back into the bottle. So as you mentioned, instead of traveling to a lot of places, that might stop. Conferences, as great as they are, I think for a while, a lot of it will be online. Maybe there will still be some in person, but the event space, conference space, it's going to go a different route. One area that's been very interesting, and we actually participated in this, is the medical consultants that you can get and services virtually, which the first time I heard about it, I'm like, what? Telemedicine? Like, what are you talking about? How's this going to work? But it's actually, we have a nutritionist that did it virtually, and I see we've had telemedicine calls with our kids' doctors, and it's an interesting world. And then I started diving into that. There's a lot of folks that see a lot of opportunity, for example, just in that space, and that's just a couple of examples. But there's a lot of opportunities during these times that are not going to be so pleasant.
The other thing that it wasn't that long ago, but in the subprime crash, think of some of the businesses that were formed during that time. I think Airbnb and Uber were a couple of the big ones, and there were definitely some other ones. So, speaking of opportunity, there's people that are inventing new businesses and new ideas and new concepts and solving problems that we didn't have 6 months ago right now. And so that's what's interesting. And talk about, telemed is really interesting.
We are living through unprecedented times, and many experts say that in the coming months and years, we're about to see some of the best real estate opportunities of our lifetime. Who's going to benefit the most from these opportunities? Those with access to capital, which is where the Real Estate Accelerator comes in. Brought to you by Good Egg Investments, the Real Estate Accelerator is an online course and mastermind that will give you everything you need to raise private capital for real estate syndications. Through building a killer brand that attracts the right investors, you'll be able to take advantage of the upcoming opportunities and scale your business. To learn more, check out cashflowninja.com/Good Egg.
But another 6 months, 12 months from now, we're going to start to see some of these things that start to pop up. Back to what we were talking about a little bit earlier. I mean, real estate isn't on sale right now. We're still towards the top of the market versus the bottom in this last cycle, subprime crash time. So probably more opportunities buying businesses than buying a lot of real estate. I think in general, affordable housing is always going to be a good place. We'll see how we get through all of this together. But I think there may be some opportunities with new businesses, new concepts, and buying some existing businesses. And maybe they were undercapitalized or didn't have the infrastructure in place. So I think we'll start to see a lot of this shake out in the next 6 to 12 months.
Yeah, I think one of the things, if you think about the marketplace, that there's really no price discovery yet. If you really, look at the stock market. I guess a bankrupt company is now the new .coms of the moment. Right. You declare bankruptcy and your shares will 4 or 5x. But a lot of it is still, there's a lot of money thrown at it. I kind of see really don't know what it's worth because nothing is quite back to a flow of free trade between folks and price discovery and so forth. So it's going to be interesting to see that play out. And, especially real estate. There's been a lot of action and still a lot of places being sold and bought, and a lot of folks are still very active in the space. So it's going to be interesting. Affordable housing, one of the things that we've talked on the show, and again, I would highly recommend you check out the previous episodes we did with Andrew about affordable housing, because we talked about it as a recession-resistant vehicle, and that could be a great place in the downside of an economy, which we definitely necessarily feel we're headed in. Any comments on that, of just how it played out during the last recession again for folks?
Yeah, I think in general, we've been in affordable housing now for, I've been investing in it for a better part of 10 years. And I think funny enough, a lot of our residents through this time, a lot of them end up being essential workers. So until that segment goes away, until, we hear about the middle class shrinking, and I don't think it's because more people are becoming millionaires. I think it's quite the opposite, right? That seems to be where the data and where the trend is heading. So there's just a massive market that needs to be served in America, and I think affordable housing is one piece of that. the other thing that we teach at Four Peaks is creating multiple streams of income. And it goes back to the American dream is dead, and having one salary tied to a W-2 job. I mean, who would have thought all of this was going to unfold and happen, and industries were literally going to get wiped out in days or weeks, or, I mean, just unbelievable, right? But having multiple streams of income, you're not reliant on that W-2 job necessarily. So you're a little bit more protected. But I think a lot of people in general out there, especially just watching the stock market and how volatile that is. I mean, the stock market's certainly been up, but I mean, it feels like it's propped up to some degree. And of course, it's a roller coaster, right? I mean, every month it's up and down, up and down, up and down. I haven't invested in the market in probably about 12 years. So I don't wake up in the morning stressed or worried about where's my position and how down is it and what's going to happen. And, so much of that stuff's so out of your control, right?
Somebody comes up with an app that doesn't charge any fees to trade, and all of a sudden, millions of people with a smartphone is now participating in the stock market. So no, there's a lot of stuff that's completely not in your control. So that's why, I appreciate your philosophy too, of having control by also having different and multiple streams of income. Because as you mentioned, it's those days are over. The white picket fence kind of one income, just pay off your mortgage, save some money in a retirement account.
Save.
Yeah, save, and
yep.
and bet on a pension, which is another which is another domino that could fall down eventually from this, because
sure.
that was already ready to break.
Social Security is looks like it's going to run out. I think it's 2033, which that's wild, right? That's 13 years from now. That's unbelievable, right? I mean, I would argue Social Security is probably one of the biggest Ponzi schemes out there.
Mm-hmm. Yeah, and this is by their own admission, right? So I know you've covered this really well. Again, in Andrew's newsletters, he covers this. This is by their own data. This is not us coming up with math and trying to figure this out and trying to over essentialize it. This is coming straight from the horse's mouth.
Right.
Yeah. Absolutely. So in these times, any takeaway for folks? Again, it's going to be very challenging. It's going to be very, very tough, but there's some light at the end of the tunnel, if you will.
Yeah, and I think it's just there's so much information out there in general, so it's just creating filters so you're not loading your mind up with just crap, right? You're just trying to process and get through this, get on the other side. I started a new podcast called The Impatient Investor, which talks a lot about this. And back to what you had said at Four Peaks, this is something that we definitely beat the drum on, is multiple streams of income. And we're very much get your money out of Wall Street, or most of it out of Wall Street, and have some more control, multiple streams of income. We actually created a report that's newstreamsofincome.com. So if you go there and put in your name, then you'll get that report for free. And again, The Impatient Investor, which is a new podcast, which really talks about this. It's not really specific to any asset class necessarily. It's just really investing outside of Wall Street, which we're very passionate about.
Great. I love that. Definitely check out the podcast, The Impatient Investor, and that website again is newstreamsofincome.com. And you can also go to Four Peaks Capital Partners. You can Google that. That'll come up. There's a ton of resources there, some great information. Andrew, as always, my friend, great to connect again. Great to have you on the show, and thank you for sharing your journey and your knowledge with my listeners and my viewers.
Yeah, thanks, MC. Always good to talk with you.
Thank you so much again for spending your most valuable resource, your time, on another episode with the Cashflow Ninja. You can check out all of the past episodes at cashflowninja.com. And as always, my friends, live infinitely. This presentation is for educational and informational purposes only. The information being presented and considered does not consider your particular financial objectives or situation, and it does not make personalized recommendations. This material is not intended to replace the advice of a qualified tax and legal advisor or other qualified professionals, and you should not use the information in place of a customized consultation with a licensed professional regarding your specific personal financial objectives, situation, and needs. We believe the information provided is reliable, but